What's good, veterans? Jimmy V here. Today I'm discussing VA home loans and qualifying, right? So Jimmy, how do you mean exactly? Well, here's the deal. A lot of veterans think that when we get our VA home loan that it's an automatic approval, right? Or that it's a guaranteed loan. To a degree that it is, but it's not guaranteed that every single veteran will qualify for the VA home loan. So what are the things that we need to be aware of? What are the things that we need to look out for? So most importantly, you can get into your home quickly and efficiently utilizing this glorious benefit that I consider there to be no second best, because VA home loans are the best. Good to go. So the first thing that I want you to know about VA home loans and qualifying is really two parts to it, right? You have to have the minimum credit score required for the mortgage lender. Now this part confuses a lot of veterans, because if you go into the VA lender's handbook, you actually won't see anything mentioned about the minimum credit scores needed in order to qualify for a VA home loan. In other words, VA doesn't have any minimum credit score requirements. However, mortgage lender, who's the one that's lending you, the veteran, the money, they put something on top of it called lender overlays. So different lenders, once again, have different credit score requirements. So there may be lenders out there that'll go as low as 580, 600. I generally recommend that veterans have a minimum credit score of at least 620. And the reason why is this is going to help them get more favorable terms by way of interest rate and monthly payment, keeping that payment once again nice and low according to your budget. So that's the first part that I want you to know. Find a mortgage lender that will give you a competitive interest rate based off of your credit score. Try to shoot for that 620 number if you can. Having said that, the income qualification perspective is much different on VA loans, because VA is really the only loan type that will qualify veterans based off of something called residual income. It's a little bit different than other mortgage loan types, because if you were coming to me today and you wanted to get conventional loan or FHA loan, we would use your gross monthly income, no questions asked. But VA, it's different. VA has this residual income factor. So essentially the way it works, and I'll try and show a chart here in the video, but there's a minimum amount of income that the veteran and the veteran's family must have left over at the end of the month. So allow me to explain. Let's say that a veteran's gross monthly income is $6,000. Okay? The first thing that you take out, there's two things in life that are certain, and that's what, right? Death and taxes, right? So you're gonna take out the taxes first. So let's just say, for example, that the veteran has roughly $2,000 a month, right, in taxes from their paycheck. So now you're left over with $4,000. And again, this is just an example, right? Some of you might say, well, gosh, that's a high tax bracket, right? Well, thanks, Joe. So $4,000. Now you have to deduct out other things like liabilities, right? So you have to deduct out things like auto loan payment if you have one, credit cards if you have it, any student loans that are not deferred out for greater than 1 year, deduct those out too. So let's just say in this particular instance, right, you deduct the $2,000 for the taxes. Now you deduct out another $1,000 for additional liabilities. Now you're left over with $3,000. So this is the veteran's residual income, but there's one other thing that you have to take into consideration. You want to guess what it is? You guessed it, the mortgage payment. Now the mortgage payment's going to be $2,000. So now you've got this net number of $1,000 left over at the end of the month. What we're going to do is we're going to take that number and we're going to compare it against the VA's residual income chart for that specific family. So in this particular instance, if you're a veteran's married, right, no children, that's a family of two. This is the approach that VA takes to income and income qualifying on VA loans. What they don't take into consideration as much is the debt to income ratio. A lot of people ask me, what's the max DTI on a VA loan? The answer might surprise you. There really isn't one. The VA's lender handbook talks about a 41%. However, when we, as the mortgage loan originator or lender, run that loan through automated underwriting, it'll take into consideration the VA residual income analysis, right? And as a result, if you are above that required residual income, we've seen debt to income ratios go into the 50s, in some cases even higher. Good to go? So if you have more questions about VA loans and income qualifying, right, I want you to know it's important that you can comment down below with your questions, and I will be sure to get all of them answered for you. Income qualifying. A lot of veterans will ask me this, Jimmy, how long do I have to be on the job in order to qualify for the loan? The answer might surprise you. You don't even have to be on the job yet. In other words, you can use a job job offer letter to qualify for a loan, right? So Jimmy, how do you mean exactly, right? I thought I had to be on the job for 2 years. Well, in some circumstances you do. So for example, when I left the Marine Corps, I got straight into the mortgage business, right? Before I was able to purchase my first home, because I was a 100% commission-based employee, I had to be on the job for 2 years before a lender would give me credit to utilize that income towards qualifying purposes. The same thing applies with overtime, part-time income, commission-based income, bonuses, and I'm probably missing out some others here, but you get my drift, right? Any of those income types, you have to have a 2-year history of having received that income in order to be able to utilize it towards qualification purposes. In addition to that, you're qualifying for a VA loan, the lender's always going to ask you for income documentation, things like W-2s, tax returns, right? In addition to that, 1099s if you receive them, your VA service-connected disability award letter. These are all things that are going to go into your VA residual income analysis to ensure that you are meeting the required residual income amount that's needed for a VA loan. You following me along on that? So if you have more questions about VA loans and income qualifying, right, I want you to know it's important that you can comment down below with your questions and I will be sure to get all of them answered for you.